Vikas Khemani joins us now. And Vikas, for the first time after many days, we have a proper confluence of factors at a global level which are against us. Do you think this could snowball into a larger fall?
Hi, Nikunj. I think, it clearly depends on how the situation pans out globally. So in a way, much awaited correction has set in, and which is in a way I feel is good for markets. From a longer term perspective, in a sense, like can it be a deep correction for Indian markets? I would not think so, because the economic linkages of the Indian markets from a liquidity standpoint of view at this point in time are very low, unlike 2008 crisis, where we had lots of leverage coming from international markets, and any impact would had impact back home. This time around, all those exposures are very, very limited. And sentimentally, there could be some impact from a short-term perspective, but I do not see any big structural deep cut in the markets.
Vikas, in last two local instances, election day and perhaps the budget day when markets have fallen, and if you bought the fall, you were rewarded. Do you think this time that may not be at play?
Again, depends on what, I would say that probably given the global environment, it might remain extended. And I think in our past conversations, I said this year, given the way markets have rallied, the return expectations should be low. And again, probably the sectoral rotation would be at play. Sectors like pharma, defenses can end up doing well in this kind of market. But I think, this kind of consolidation would be good, I would assume. One should not be in a hurry, but at the same time, there's no need to panic. I am quite, confident of the India story from medium-term to long-term perspective, and also I don't think there are going to be any repercussions from a sell-off perspective if there was to be any liquidity crisis, which I don't think at this point in time at least is warranting. There are talks about potential slowdown in the U.S. economy and all. Probably, in a couple of meetings or few months down the line, this might set out the pace for interest rate cut in U.S., which anyway is expected. And if that happens, it will open up, additional line of flow towards emerging market, including India. So yeah, I think we have to all navigate this period of, in this period only there'll be lots of opportunities to shop, buy, but no need to rush and hurry. Take time, is what I would say.
What's the shopping list looking like? Is it going to be more of the same, the leaders of the last lap of the bull market, or do you think something's changed this time?
I think the way at least we look at it, same India story. Nothing changes in India story, same manufacturing theme continues. I think financials will do very well. Consumption will do well. So I think, from India's standpoint of view, I don't think anything changes. We continue to remain bullish on most of the sectors we were. And we will look for companies. At the end of it, boils down to the company's availability at, right price. So you keep, looking for your right price and right names, and as and when they come, jump in. We, when we raise the new fund, we're still sitting on some bit of cash. So we will deploy them as and when, we get to those opportunities.
Pankaj Murarka as well joins in. Pankaj, hi, morning. Like Nikunj was highlighting, the last two falls that we had, internal cues, although, both the election result outcome as well as the budget, you were instantly rewarded if you bought the fall. You think today is going to be a little different because it's a global rout underway and you don't know where the selling is going to actually stall?
Well, that could possibly be the case, but I still believe that, the sell-off that we're seeing is nothing but a correction in a bull market, probably a much awaited one. All of us were looking for a correction for some time because the last rally that we've had a very ferocious rally in equities in India in the last 15 months from March 23 lows. And it's been about 15-16 months. We have not had any meaningful pullback in this market. As all of us know, as you said, the last two pullbacks were just for a day or day and a half, which hardly calls for a correction. So I think given the fact that there's some turbulence globally on account of concerns about U.S. growth, there's a unwinding of carry trades because of sharp pullback on yen, and that's the funding currency for the world for the last so many years. I think there's a global reset happening, and I think it's a macro shift in terms of probably an accelerated rate cuts going from the Fed now going forward from September, from a environment where the base assumption was probably will get one rate cuts in US this year. Now, the base assumptions US markets are pricing in is about 100 basis points of rate cuts and 50 basis points 100 basis points of rate cut this year and probably 50 basis points going into the next meeting in September itself. So all of that does call for it's a big macro shift from a global perspective, and that could lead to unwinding of some carry trades and some unwinding in emerging markets as well. And because of all of this, I think this could be a proper correction in this bull market. But I still believe that the underlying fundamentals for India remain strong. So any sell-off is a correction in the bull market and probably should be good opportunity for longer-term investors to step in.
Casualty of any global sell-off is commodities, and that's where commodity consumers, they benefit, commodity producers, they suffer. There is a bit of tailwind which will happen because of monsoon. The market could move into defensive mode. So is it time to change gears? I mean, avoid cyclicals, look at, let's say, defensives, commodity consumers rather than producers?
So, well, Nikunj, I would think this would hold for most of the commodities except oil. Because commodity weakness will get accentuated because of slowdown in China also. We've seen a very sharp slowdown in Chinese economy, and the Chinese government is unwilling to step in with any meaningful stimulus, and whatever they're doing is pretty far less and a bit too far late in the day. China needs an economic stimulus of something magnitude of $1 trillion to get their economy back on track or to achieve the targeted growth, which the Chinese government looks unlikely to be. So I think we'll see softness in commodity prices, and a commodity consumer like India should benefit out of it. I said except oil because we're seeing a fair bit of turbulence on Israel-Iran front. And if something goes really out of hand there, which possibility cannot be ruled out given what has happened over the last week, then there could be disruption in oil production and transportation, and that could lead to some spike in oil prices. So I think we are in for some turbulent time in that. But coming to our market, I think so there will be a sectoral rotation because last 2 years, one of the big leaders in the market has been industrial and cap goods, defense for that matter. While the underlying growth momentum in that sector or these companies underlying these sectors remain strong, but I think valuations are pricing in growth far too ahead in the future. Most of the companies now are discounting 3 years earnings out, including and presuming flawless execution. And there could be some slips on the way in that sense. So I think post this correction, as we set ourselves for the next up move in this bull market, there will be sectoral rotation. And probably some of the underperforming sectors like IT, healthcare and consumers probably can be emerge as and including financials, which has been a big underperformer over the last 2 years, probably could take the baton and lead the market for the next rally from here on.
Interesting. Vikas, that's not your view, right? You're not anticipating any sectoral churn, are you?
Like I said, I think you will have always some sort of, like I mentioned, that some defenses might come into play. Pharma has been doing well, which can continue to do well. Financials, we've been very, very positive, and I think you see a meaningful correction. So I think that can also happen. I think we continue to remain bullish in manufacturing as a theme, which will, I think, continue to do well. So some overpriced stocks, both in mid-cap, large-cap, including, as Pankaj was mentioning on the capital goods side, can see some bit of a correction. And that would be a healthy one, I would assume.
On that point of commodity consumers versus producers, Vikas, I mean, cyclicals, commodities, they tend to do well. But if the trade reverses, for whatever could be the reason, is it time to look at commodity consumers now? Because suddenly margins will look better. Suddenly monsoon is now at play. I was looking at Colgate numbers, Britannia numbers. All of them have got their volumes growth back also.
So I think if your view is, from a 3 to 6 months perspective, answer is yes. But I think generally if you see all the commodity prices gains all have to be eventually passed on. So, and I think all the players like Colgate and all, they have not done well only because of commodity prices, because they've got the volume growth because of the business strategy. So I think ultimately it all boils down to the industry structure, company and what's there. Of course, commodity coming down in general helps to India, both in terms of inflation as well as, overall cost of infrastructure. The short flip out side of that could be in short term, people who are sitting on the inventory could have losses in their books because of inventory fall. So to that extent, your corporate profitability might get impacted in short term because every user of commodity also carries inventory, and that has a short term impact on the profitability part. So you could see that. So every time there's a sort of disruption happens in commodity, it always has a positive negative impact, and all of us have to kind of navigate through Structurally, it is positive, but short term, it could be negative.
Will be positive. And Pankaj, if we could get in your thoughts as well on the same with respect to especially the kind of fall that we're seeing in crude oil prices and what that could potentially mean for us.
Well, if you look at fundamentally from a demand-supply dynamics, then probably crude prices should remain weak because globally growth is slowing down across US and Europe, and finally China's growth is seeing a very sharp slowdown. So fundamentally from a demand-supply perspective, crude markets are well supplied, and crude prices or crude oil prices should remain weaker. But as I said, there is a big geopolitical event there in terms of what's happening on the Israel and Iran front. And if we see some spike in retaliatory strike by Iran, and if we see some geopolitical escalations, that can lead to disruption in supplies of crude, and that is what is one factor which is unpredictable, which is why I said crude is an outlier where one doesn't know how it behaves in the short term. But from a medium-term perspective, assuming things back to normal, I think commodity prices will remain much softer going forward, at least into the next year in that sense. And India should be a big beneficiary of that, undoubtedly.
Because when you say that you would be buying more of the same, what is that more of the same?
Good quality companies, businesses which can deliver returns over a long period of time. But more importantly, I think, like I said, I think manufacturing still very interesting. Companies in the short term they might have got out of hand, but as valuation corrects, you would look at financial. We continue to remain very positive. We've seen correction. We might see some more correction in this fall. I think there will be again good picks in this time. Consumer stocks, like I was telling you earlier, that we remain that cycle is turning, and you could see interesting play out there. So within that, again, segment sectors which you like, you will pick and buy. So across all 4 or 5 themes of India, in my opinion, opportunities should be looked at, which is consumption, manufacturing, infrastructure, and financials, and lastly services. So story doesn't remain same, and unfortunately, India is one of the very wide, diversified. I mean, lots of segments and opportunities are there. So we all are, I think, according to me, lots of choices, and it boils down to the picking the right management and right valuation.
Pankaj, the real star sector has been PSUs, and that's where some would also say that excesses are getting built up. If PSUs are in a well-defined leadership, will they be a buy on every bad day like today?
Well, see, the low-hanging fruit in PSU is taken off. We cannot paint, in my view, all PSUs now with the same brush. We'll have to distinguish between these companies, because the starting point of this rally 18 months back, where all these PSUs were trading at valuations which would be paid off by their next 2 or 3 years of profits. So those valuations, comfort or compelling, extremely compelling valuations where you're buying them for a dime is not there in the market. I think we need to distinguish these PSUs amongst companies which have strategic leadership in the sectors and very strategic advantages in which they operate, and their growth prospects and valuations. So, and within PSUs, there's a very big dispersion. On one hand, you have companies like Hindustan Aeronautics or some of those defense companies which are trading at 40, 50 multiples, which are even more expensive than private sector companies. And on the other hand, you still have PSUs in financials, let's say Power Finance or REC, which are still trading at single-digit multiples, or a State Bank trading close to 10 times earnings and all of that. So I think one has to pick the right businesses within PSUs and probably at the right valuations in that sense. There will be PSUs where money is to be made from here, but equally there will be companies where money will be lost as well. So I think that low-hanging trade, directional trade, just blindly buying PSUs, that's done. That's over.
Interesting. In fact, Pankaj, I'm quite intrigued by your call on IT as well. We chatted about it the other day as well. What gives you conviction that this could be a good hiding / bottom-up story to play right now?
Well, Aisha, I started my career as an IT analyst. I've been looking at this industry for 26 years. From my readings or whatever I see from global Fortune 500 or Fortune 2000 companies, I think there's a huge amount of pent-up spend which these companies have held back on in the last 18 months or 2 years, which is going to be unleashed. So we'll see a significant acceleration in IT spends globally from the top 2,000 companies. and which effectively would mean much more business for all the IT services companies. And all of us know India dominates that space with over 70% market share. So I think the spends in IT, which have been significantly held back or were slow or sluggish in that sense, should start picking up from probably later part of this year, and we're already seeing early signs of that. And I think this cycle will be a very prolonged spending cycle in IT with emergence of AI and companies wanting to, every company will have to integrate AI into their business and solutions. So I think probably the next cycle of IT as it starts probably end of this year, next year, could be a slightly more longer term cycle, and it could surprise us on the upside in that sense. So that is what makes me positive on IT from a slightly more medium term to longer term perspective. And from a near term perspective, I clearly think the worst is behind the sector.
Large cap service providers that you're betting on, or is there something else within IT that you like?
So clearly, that's the first port of call. You buy into some of these large cap IT services companies, and then probably, but I think the mid-cap companies will be equal beneficiaries, or mid or small-cap companies which can execute well will be equal or beneficiaries of that in that sense. So one will have to be slightly more wiser in terms of stock selection when it comes to mid and small-cap. But I think this spending cycle will be so significant and probably so long-term that I think everyone in the space will benefit if they can execute well in that sense.
Thank you so much for joining in and sharing with us your thoughts on what exactly this fall means and how one should be approaching it in terms of the stock-specific as well as sector-specific strategy. So that's Vikas Khemani maintaining that, yes, the positive story continues to hold out for India. No need to panic. Don't be in a hurry. But yes, there are opportunities in a market like this. Manufacturing, financials, consumption, all of those sectors can do well. Don't rush in to buy at a time like this. And of course, the correction that we're seeing in commodities will continue to benefit India. Pankaj Murarka as well talking about how this is a much awaited correction. There's been a bit of a global reset. There could be a sectoral rotation for the Indian markets, and it's IT, healthcare, consumer and financials that could potentially lead the next rally. So that's really the word coming in, Aisha.